Hello everyone, how are you? It's Kay. So this is the video about how to trail the profits along the way. Once you enter the trade and you set the break-even lines, and then the next question is how to trail the profits along the way. You don't want to keep the break-even and the market takes off and retrace back to break-even, and you don't want to end up with the break-even. You want to fix profits along the way until the trend ends. So this video is about how to trail the profits, and with my own way, with my own strategy, I will talk about that topic. So let me switch screen now. And as a quick disclaimer, as usual, this content on my YouTube channel is basically based on my own experience for educational purposes only. So when you take trades, please do at your own risks. Okay, so again, today's topic is about how to trail the profits. So my question is, first of all, do you trail the profits? Do you trail the profit? That means once market goes towards their direction, and at some point you fix profit, but before you fix a profit, let's say if you are running 100 pips or so, then do you fix some part of your profits and keep running the rest, or you don't do it? If you don't do it, then you should do it. It's my recommendation, because before I didn't know how to trail the profits. I didn't have the idea of trading the profits. But after I mastered this strategy, after I set the break even, then my performance got actually much better. And so in other words, if I don't trail the profits with my strategy, then I might not be able to become a full-time trader and profitable. I might still be a break-even or losing trader. So this topic, in that sense, is really important to make yourself closer to a profitable trader. So I hope you can master this strategy on this video and become profitable in the future markets and trades. So let me switch to the PowerPoint slide. So again, today's topic is the last topic actually for this lecture series about my strategy. So I have been covering all these topics, and today is the last one, how to trail the profits. And if you are new to my channel, and if you haven't seen the other videos yet, please do. The videos are in the archive. I put the link on the below description and also the comment box. So you can find the playlist, and you can watch from the first all the way to today's last video. And this PDF is actually available to download. And also I will put the link on the below description where to download the PDF. So based on this PDF, please check this video. And also join my future live streams, because basically whenever I talk about my own trades, I basically follow my own strategy, KTS. So that's how I organize my trades. So this is my original strategy. I use ichimoku kinko hyo in higher time frames and get the entry confirmation on the lower time frame, like the 5-minute. But the question today is how to trail the profits once the market starts to go towards your direction. So today I will be running the Forex tester and show step by step first how I screen charts and how to wait for the trending market, and what confirmations to take the entry, and when exactly I set the break even, and then how I trail the profits and how I fix it. So basically this is the wrap up video of my whole structure system. So let me switch to the Forex tester and show the way I take trades step by step. Okay, so this is the Forex tester. This is not the live market. This is the market back in 2011 on the Euro USD. So on the upper right, I put the 4 hour, and on the lower right, I put 1 hour time frame, and on the left, I put the 5-minute chart. So so basically what I do is, in the tester, I usually take the 4 hour and 1 hour time frames and look for the entry timing in the 5. In the live market, I check either daily or 4. Like I mentioned previously on this slide, I check the daily or 4 and confirm it by 1 hour or 30 and take entries by 5 or 15-minute time frames. But this time in the running tester, I take the 4 hour and 1 hour time frames fix and 5-minute fix. So first we check the 4 hour, right? So again, coming back to the tester. So this is a 4 hour, and 4 hour time frame is now flat. If you check the Kumo, Senko span B is flat, Senko span A is flat, and Kijun Sen is also flat. So in this case, I stay away because the market might be resisted and it may retrace back to the Kijun Sen. So let me run charts by the 5-minute, and we monitor together one by one on these candles and see if it goes up or not. So let me zoom out on the 4 hour, and let me just run the chart one by one. Okay, still 4 hours flat, so we don't really trade. We have to keep watching the chart until 4 hour becomes bullish. So it continues to be flat. This is range. When it's range, I don't trade. The whole time I skip the chart. It's now retracing back and goes up, breaks, but this is Y wave. And the 4 hours still flat, so we don't really care in this case. Okay, 1 hour looks to be up. Let me just zoom in. So 1 hour chart, Kumo Senko span B is up and A is up actually, and Kijun Sen angle is also up. But because 4 hours flat, we don't really have to care. We have to keep watching the chart. So let me just run quickly until 4 hour turns bullish. Clearly. Okay, so here, at this breakout, that actually made the 4 hour, again, Kumo up, Senko span B up, A up, and Kijun Sen is up also. So that means in this slide, back on this one, 4 hour is now up. So now the next question is whether 1 hour is up or not. If 1 hour is flat, then we have to wait until 1 hour turns bullish on Ichimoku, Kijun Sen, and Kumo. And most likely it's bullish because it broke the resistance, but let me see just in case. So 1 hour shows it's bullish too. Yeah, Kumo's up, Kijun Sen is up. So this is where I look for an entry timing in the 5-minute. So let me go down to the 5-minute chart. Okay, so in the 5-minute, what I see here is, I see there was a gold cross stochastics. Gold cross stochastic is one of my entry confirmations. And also, this is called band walking. So the price is in between deviation 1, 2, and this is called band walking. So band walking is happening, and I will be waiting for one more confirmation. So, and actually this, I just happened to stop here, but I can see that the price is closed below the closed on the previous resistance level in the 5. So the market still may be bearish from here. There's a long wick in the 5, and there was a resistance levels here and here too. So the market still might retrace in the 5 and push back and goes up. So 4 hours bullish, 1 hour is bullish, but 5 might retrace. So in this case, I wait for 1 or 2 more candlesticks just to make sure the market is bullish in the lower time frame. And when I can confirm the market bullish in the 5, also in this case, break out all the resistance, then I enter there. So let me just run the chart 1 or 2 more candles. So let me just go 1 first. Okay, so okay, looks like there's a retracement, but still this is bullish in higher time frames. So I will continuously monitor for the entry timing. Okay, now there's a nice bounce. Nice bounce, and I just wait for, let's see, one more to see the clear breakout, just in case. Okay, still band walking nicely, retracing. Okay, it's retracing now. Okay, now this is a nice breakout. So this is where I enter the trade. So again, 4 hour is bullish now. Kumo is up, Kijun Sen is up at this breakout. And 1 hour also shows it's bullish. So 5-minute chart shows it's bullish also. Now it's bullish in wave. I have actually multiple confirmations. If you haven't checked the video about my entry confirmation, please do before proceed this video. But just in case, the way I look for the entry timings, I use these tools and indicators. I use price action, I use lines, Bollinger Band, stochastics, and Fibonacci to capture the confirmations. And I look for 3 confirmations, at least 3 or more confirmations out of the list on this slide. And this time, let me see how many confirmations I can find. So I can find first, there's a gold cross in stochastics. That's one of the confirmations here. And band walking is happening. The band walking means, again, when the price is in between Bollinger Bands deviation 1 and 2, that's band walking. So that's the second confirmation I got. And there was a nice resistance breakout and also counter trend line breakout. This is counter trend line breakout, and that is valid. That's the third confirmation here. And let's see, as I can see, there was this is actually double bottom I can see, W bottom, and this was a neckline. And this neckline has been broken bullish here. So that was the fourth confirmation. So like this, I build up these confirmations and look for an entry, precise entry timing in the 5-minute to avoid the retracement after my entries. So looks like we have 4 confirmations, 4 entry confirmations. So I will enter here now. So before I enter trade, there's another question I have to ask myself, which is, where will be the stop loss? Because if a stop loss is too wide, then I'm not gonna take this trade. So stop loss will be reasonable to place here below the support, below this W bottom here. So if I buy right now, then stop loss is going to be 70 pips. And 70 pips of stop loss is a bit too wide. So in this case, I look for another reasonable place to put the stop loss. And I see there are 2 pushbacks here. And if I take the second pushback here, then that will be 35 or 30, yeah, I would say 33 pips to stop loss. So this is reasonable to place. So in this way, I can have a tighter stop loss, 33 pips, and expect the market goes up continuously. And if the market keeps on going towards our direction, then we can move the stop loss to break even and then trial the profit along the way. So let me place order now. This is actually a good thing about the trading view, is that actually we can place orders. So stop loss I will place here 33 pips down just to be safer. And I take 2 trays. Usually I take 2 trays. So let me just place another one here and put the stop loss below the pushback before the breakout. That will be reasonable to put the stop loss. And I take 2%. In the live market, I take 2% to stop loss. So I take 2 positions. So in this case, 1% each. To stop loss I take and see if the market goes up in this way. Okay, I hope so far so good. So basically, again, I follow this structure of my strategy and decide which one to take trades. And when exactly to take trades, and where exactly to place the stop loss. So let's see, let's run the chart to see if it goes up. If it goes backwards, then I will talk about an exit timing and show you some other example for trading the profits. So let's see. Okay, initially the market breaks, but it may retrace, so we can't be happy just because the market just goes up. We have to keep watching. Okay, so looks like this time it goes up. Okay, now this is ranging, so it may retrace. Let's keep watching now. Okay, there's a outside bar, outside and inside. So most likely if the market breaks here, hold on, let me get this indicator tool. Oops, sorry, hold on, graphic panel. And if the market breaks here at this resistance, then I move the stop losses to break even, because this is outside and inside bar. So for me, when I see this market still, the buyers stopped coming in and sellers are not here either, and the buyers and sellers fighting right now. And these buyers most likely put the stop losses below here or here, and the sellers are placing the stop losses above the resistance. So if the market breaks the resistance, then I think it goes up continuously because it takes the seller's stop losses. But if the market goes down, then it takes the stop losses for the buyers here, and the market may retrace backwards. So let's see which way it goes. Okay, looks like there's a breakout. Candlestick close becomes above the resistance, means it's a breakout. So when I see this breakout, I move these stop losses to break even. And break even means I move the stop losses above my positions, so that even if the market retraces back this way, you don't lose. So as soon as you set the break even, it becomes break even or win game, which everybody wants to play. And that's basically what I play every time I take trades. So usually when I set the break even like this, I simply leave chart for a couple of hours, maybe 3 hours or 4 hours, I leave chart. But today, let's continue to monitor, because the topic is about how to trial a profit along the way. So let's see if it goes up continuously. Okay, initially it retraces. Let's see if it breaks. Okay, this time it's ranging, and let me check the 4 hour. 4 hour is up still. You can see that the Senko span A is up, and Kijun Sen angle up also. So buyers still dominant over sellers. So I don't exit in this case. I keep holding the market to expect the market breaks the resistance. So let's see. Okay, looks like the market is ranging now. But since we have put the break even, we don't really care. We just keep watching the chart until it breaks bullish. Okay, and now this is called P wave. This is called the P wave or the triangle range, like this. So simply I wait for that P wave breakout bullish this way. It may retrace back, but most likely that will be supported here and breaks bullish, because 4 hour is still showing bullish this way. So no reason to exit. I used to exit like this when the market started to range, because it may retrace, but now I don't exit because of that reason, because 4 hour still bullish. So let's keep watching. Still in the P wave nicely. Let's see. Okay, now there's a P wave breakout. A P wave breakout exactly happened here, but there are resistances. There are resistances here. So this is still not a good timing to move it to here, but I would say it's safe enough to set the stop loss in the beginning of the P wave, which will be here. Yeah, so let me move it to here. So these are the break-evens. But if I move the stop loss, if I drag, simply click and drag stop loss up above to here, then you can see on the right, over here on these numbers, you see 165. And 165 means 16 pips, 16.5 pips. So in this way, even if the market retraces back, you still make 16 pips of profit. And if the market keeps going down this way, you end up with a break even. But this is how I trial the profits along the way. I don't leave chart by break even, because the market may go up like 50 pips or 100 pips, and then it may crash and goes down all the way back to the break even. And you don't want to lose all these pips, right? So if you can monitor chart every couple of hours like this, I recommend you to manage the stop loss and trial the profits like in this way. So now P wave breakout happens. So most likely I think the market breaks and goes up. But if it goes back, I will talk about the exit time. So let's see which way it goes continuously. There are resistances. There are resistances here, so the market may retrace all range still. Oh, looks like there's a big breakout. And when I see this big breakout, I move this stop loss to the most recent low in the 5 minutes. So that will be here. Okay, so 24 pips, I fix a profit. And the other one, since the P wave breakout and new breakout happened like this, I would move the other one, the second stop loss, to the beginning of the P wave like this. So in this way, I fix, this is a 24, 25, right? So 24 pips. So if the market goes back for any reasons, I still can take profit of 24 and 17. So I don't lose in this case. I never lose in this way. That will be profit or more profit game, which everybody also wants to play. So this is how I trial. So now there's a nice breakout in the 5 minute, and for sure 4 hour is continuously bullish. So no reason to exit. I keep holding and trading the profits along the way until 4 hour becomes flat. So like this, I don't usually take the TP, because if I set the TP here, if there's a resistance, let me check. Okay, looks like in this example, there was no previous resistances. But let's say if there was a previous resistance on the weekly or daily, very close like this. And in the textbook, you have to put the TP here or slightly below the resistance and let the market hit the TP and take profit there. But I have been seeing so many examples where the market breaks the resistances and keeps going up, especially if Kumo thick and long and Kijun Sen is up continuously and Chikou span above candles, there is a chance that the market continues to break and goes up. So in this reason, I don't set the TP, but as long as it goes, I trial the profits along the way. So this is where the body part becomes bigger and bigger. So again, coming back to the 5 minute, nice breakout. So the market may retrace. Usually when we see this a big bullish candle, the market may retrace, or there might be an engulfing inside bars, usually, and then breaks up this way. But let's see how it goes. Okay, there's inside. Oh, inside and breakout. Okay, very sharply, very fast. So here I see engulfing breakout inside, so I can move the first stop loss to below this inside, like this, and I fix now 33 pips. I fix 33 pips, and the other one I still keep it here on the 17 pips. Okay, so 33 and 17 pips I fix And then I trial the profits along the way. Let's see how far it goes. Looks like it just keeps going up. Okay, so there's another N wave, another pushback and breakout. So when I see this, I move the stop loss to here. I fix now 53, 52 pips on the first one, and second one I will still keep it here. Well, I can move it here. I can move this one to before the breakout. So that would be here, and that would be 30 pips. So now I fix 52 pips and 30 pips of profit and still keep holding the trade. And this is how I trial the profits along the way. And this way, the body part becomes bigger and bigger. So this is the beginning of the body, and the body part is up to here now if the market retraces. And if the market goes up this way, the body part becomes bigger and bigger. And this is how I trial the profit. So let's see how far it goes this way. Still band walking. Okay, now looks like it's retracing back. So it may hit the stop loss, but let's see. Orange band squeezing, dead cross happening, so it may retrace. But so here I stop and check the 4 hour. Okay, let me just move one more candle. And I check the 4 hour time frame. If 4 hours now flat, I will look for an exit timing manually. But let's see. Okay, 4 hour is still bullish. Kumo is up, Kijun Sen is up. So the chance for the market to go up continuously is still higher. So I don't exit yet manually. I keep holding. So if the market takes this stop loss, I still take it. And then it may go up afterwards this way. Then I start to trial on the second stop loss. I move the second stop loss to here and continuously trial on the second one. So let's see how it goes. Okay, looks like it hit the stop loss. So I fixed 54 pips, 50 some pips of profit. But still I have the second one. So let's see. Okay, it looks like it's gradually going down. Okay, now the market gradually start to move up. So there is a new N wave. Not the N wave, but there was, I would say, W bottom. And this was a neckline. And there was a neckline breakout and the resistance breakout here. So I will move the second stop loss to below these W bottoms. So now I fixed 47 pips of profit and continue to hold because higher time frame is still bullish. Let me just move a couple more candles and check the 4 hour. Okay, so now let's see how 4 hour looks like. Okay, 4 hour chart, if you see Kumo Kijun Sen is flat, Senko span A is up, but Senko span B is flat. So since Senko span B flat and Kijun Sen flat now, I look for an exit timing because as ichimoku nature, when you see Kumo flat, Kijun Sen flat, that means the market may retrace because the sellers and buyers are 50-50 now, so it may not have enough power to break the resistance. It may retrace back to Tenkan Sen or Kijun Sen. So this is where I look for an exit timing on the 5 minute. And with that in mind, if I check the 5 minute, there is no exit confirmations because the market is bullish in the wave. Gold cross stochastics happening. Still, market is band walking towards major direction. So it may break resistance. It may break resistance and goes up. So I will simply keep holding the trade. Okay, looks like it was exactly resisted here. So it may go down from here. So let's see. Oh, it looks like there's a nice breakout. Okay, so at the breakout, I moved the stop loss to the most recent low. So now I fixed 70 pips. I fixed 70 pips. And there's a gap in between the candles. I think this is a new day or maybe news. So I expect the market goes up now. Now 4 hours bullish. Right, let's see. 4 hour Kumo's up, Kijun-sen up now. So then I don't exit manually. I keep holding a trade. So I get the 70 pips of profit fix. Okay, so looks like it went down soon and hit the stop loss. So in this way, so again, I fix a profit of 70 pips. And also previously 54 pips, 50 some pips, I fix a profit. But this is basically how I trial the profits and exit, entry and exit. So yeah, so again, so yeah, in the end, so again, about the fish analogy, hold on, let me write the fish analogy. This became the body part. So this is a tail of the fish. This became body part, and this becomes a head. So like this, tail of the fish and head of the fish. We don't eat the head, we don't eat the tail, but we only get the body part because this is where the juice is. And this is how I trial and fix profit. So as it turns out, this was a good example. I was able to show some good example of how I trial the profits. But yeah, that's how I take profits usually. So 4 hour is still bullish, right? Kumo is up, Kijun-sen up. So although I exited with the stop loss at the stop loss, if I have 3 other confirmations to buy, I re-enter the market and expect the market goes up towards my direction. But since it just retraced and hit the stop loss like this, I just exit once and then see if the market goes up continuously or not. But that's how I do. So this time on this video, I showed you how I fix the profits and trial the profits along the way. But again, the most important part in my YouTube channel and also my strategy is to be a non-losing trader. As I state here, to become a non-losing trader. So make sure when the market starts to go towards their direction after your entries, then make sure you move the stop losses to break even. And after you set the break even, don't leave like that. You have to trial the profits along the way like that way. So at least you fix some profits. And then if the market goes back, you take it there. And this way, you know, the market, the Forex market especially have some spikes sometimes without any reasons, without many big news. Sometimes suddenly the market just shoots down or spikes. And even if you see the market crash in that timings, you can still fix some profit. You don't lose. And you can preserve your own asset, your money. And when you find next good opportunities, you can also reinvest. You can also re-enter the markets and keep making profits along the way. So again, this is actually something that I mentioned on yesterday's or 2 days back psychology live stream, was that I was focusing on how to make profits before and I was losing constantly. But when I started to focus on how not to lose and how to keep surviving in the market without losing too big, and also the break-even mindset, then I start to win more than when I thought about making profits. And this is actually true. So now I say the risk management is the most important part, because risk management, the risk, is closely connected to psychology. The profit actually is not really connected to psychology, but the risk part, the losses and risk part are closely connected. It usually gives us some psychological impact in emotions. So that's why I say risk management becomes the very key to success. So to be honest, if you manage and if you master the risk management part, I think no matter which strategies you use, I think you can make profits. You can even take trades by the candlesticks only and make profits if you have a good risk management. But I do use Ichimoku Kinko Hyo because Ichimoku gave me lots of inspirations, lots of new ideas about the trades, and also visually, it's so easy to identify and understand the market conditions, whether it's a trending market, ranging market, whether the market might be resisted by the resistance support or not. So that's why I use Ichimoku Kinko Hyo to support my trades and also to be time efficient in my screening time. So that was the topic for today's video. I hope you enjoyed and master this mindset of non-losing trader throughout the video series. So like this, since August, I started to do a video series. So yeah, in the month of September, I'm thinking to do a video series about psychology or the mindset. So hopefully you continuously learn on my YouTube channel. And when I do the live stream or the videos next time, I hope to see you again. So anyways, thank you so much for watching until the end. And if you liked it, please press the like button. And please subscribe and click the bell button, notification on, so that you get notified as I do the next live streams or videos on my YouTube channel. So until I see you next time, please stay healthy and stay safe and stay gold. All right, bye for now, everyone. Mata ne. Thanks so much.